everyone, welcome back to the channel, your number one source for income-oriented investing. Time to go over the entire income landscape on the Canadian stock market. So if you're American, the American or US version is going to come out in the next week. So let's check out what the stock market has done in the last month. And just for reference, I am filming this on November 5th, election day. So in the past month, S&P 500, which is the best indicator for the US market, up 1.42%. So pretty good. The TSX Composite Index, a little bit less than that, just under 1%. So overall, it was a pretty good month, I would say, for the both stock markets overall, with, of course, the American one doing better as usual. So now let's check out the entire income landscape, everyone. And first, I'd like to thank the sponsor and good friend of the channel, Harvest ETFs, who is having Professor Jeremy Siegel back on the channel. If you're interested, they're doing the cast on November 14th, so you could go on their website, make sure to reserve your spot if you're interested. They're going to talk about everything, the stock market, and he's going to be, it's also going to be with Michael Kovacs, the CEO, which I recently did a Q&A with, which came out last Wednesday. So let's go over the income landscape in terms of diversified funds that you could pretty much buy and hold forever, that can make core building blocks of your income portfolio. We'll start with the leverage ones first, then with the non-leveraged ones. You guys know I'm a fan of the leverage ones. So Harvest, the sponsor of this series, has HDIF. This is their all-in-one, all equity, all-in-one ETF. So this compromises of all of their covered call ETFs, or most of all of their covered call ETFs in one, with 25% leverage. They do have a non-leveraged version as well, HRIF. The yield is currently over 10% right now. They also have HBIE, which is a 60-40. Still income, still 25% leverage, but 60% equity, 40% fixed income if you're interested in that. The yield is actually pretty high considering there's fixed income, but a big portion of that fixed income, as we know, is covered call. So that definitely helps. Here it is. Just under 10% yield if you want a 60-40 split if you're into that. Next, we move on to Hamilton ETFs, H-Yield and HDIV. There have been no changes to the distribution. Same thing for the Harvest ones, by the way. Absolutely no changes. We're still at 14.3 cents a month for H-Yield and HDIV 17.3, I believe. 17.1, sorry. 17.1. So doing well. Both of them are doing well. We know that H-Yield is the S&P 500 practically, right? It is Canadian dollar hedged, by the way, and that's why lately it's been lagging a little bit. USCL, which is pretty much the S&P 500 with no currency hedging. So if something is currency hedged, everyone, like HYLD, if the Canadian dollar gets weaker, that does not help HYLD. But if the Canadian dollar gets stronger, obviously that would. Something like USCL, if the Canadian dollar gets weaker, that actually helps this fund because it's not a Canadian currency hedge. So USCL, no changes as well with the monthly distribution, 23 cents. You see that the yield, by the way, of USCL and HYLD is in the 12% range, and the HDIV, it's just under 12%. HDIF, HBIE, by the way, is a little over, HDIF is a little over 10 right now, and HBIE is a little under 10. So moving on, we got QQCL, which celebrated their 1-year anniversary recently. That's why they're able to put the yield now. You see that here, the annual distribution yield. So this is going to be one of the higher yielding ones because it's a NASDAQ 100, a little bit higher volatility than the S&P. That's why you see 1289 versus 1233. So again, no changes for this one as well. You got CNCL if you want an all Canadian stock one, which follows the TSX 60 index. No changes here as well, just over a little over 12% yield here. No changes at 20 cents a month here. And then they have also the developed outside of North America, and then they have the emerging markets, which have been having trouble getting a volume in AUM here. So I guess, this region is not that popular. Even their non-leveraged versions, not that much AUM going on. The emerging market ones as well. So Yeah, these ones personally not my personal favorite regions to invest in, but if you want the all-in-one with all regions, which basically EQCL combines USCL, QQCL, CNCL, and these ones to get you the whole world, which also recently celebrated, I believe it's 1 year anniversary. Yeah, October 10th. Just under 12% yield. This honestly would be my preference if you want the world. If you want the whole world, instead of getting these ones separate, you might as well get EQCL. And this is part of the grade 8 as well, EQCL. So moving on to the last leverage one, BMAX from Brompton. Definitely no slouch on the lower end of the yield. But that's just Brompton for you. They're definitely more focused on growth over yield, or total return over yield, but doing really, really well in terms of performance as well. You know, pretty much there, not 100% there with US and HYLD with the indexes, which are about 35% in the last year. This one's about 30, so doing still pretty good considering it has 25% fixed income in here. So no changes as well for the distributions. We know that they've increased them twice now, and they're now sitting at 11.5 cents a month. Moving on to the non-leveraged ones, you have BMO, you have the ZWQT, which is their all-in-one, which combines all the different BMO covered call ETFs. Very low yield, unfortunately, because there's no leverage here, but you definitely can have a lot of, you know, you're going to expect a lot of consistency and safety. You're looking at something like 6% yield right now. Hopefully they increase it. I don't see why not. They should increase it, maybe starting in 2025. We'll see. Then you have the Evolve S&P 500 and TSX 60 cover call ETFs, which are doing really, really well. You know, especially the ESPX. You guys know I prefer the American market, American stocks over Canadian stocks, but this one keeping up really, really close with the actual, you know, Vanguard S&P 500, a little bit under, but it's normal. There's covered calls, but there's only covered calls on 33% of this, 33% of the portfolio. The fee is really low as well. No change at 15.5 cents. I have a little inkling that they'll be raising the distribution, if I know Evolve, quite soon. I think they could do much better than 7.5%, but we'll see what happens. Either way, great performance. If you want an S&P 500, but for some reason you don't want USCL, you don't want the leverage or HYLD, there's you have ESPX, and you also have USCC, which is a non-leveraged version here. ETSX, same thing, but on the TSX 60, on the Canadian stocks. Same thing. The yield, no changes in distribution. The yield is a little bit higher at 9.29. This is why I feel like they're definitely due to increase the yield a little bit on ESPX, but we'll see what happens. So we got a few new fresh faces, new ones to the game. There's the Canadian listed version of JEPI and JEPQ, which to me look exactly the same as the American counterpart, except they're actually listed on the Canadian market, so you don't have to worry about the 15% withholding tax if you hold these in a TFSA or non-registered cash account as a Canadian. You can buy them in Canadian dollars as well. The fee's the same. The dividend, there's no dividends declared here. Maybe it's not updated and they have dividends. But I expect very similar yields to JEPI and JEPQ in general. So somewhere between 7 and 10 for JEPI, a little bit higher for JEPQ because it tracks more the NASDAQ, and the JEPI tracks more the S&P. Do I have that right? Do they see that here? Yeah, S&P. But managed by the same guy, right? Hamilton Rayner, who I've had on the channel a year ago maybe, or more than that, where we discussed JEPI and JEPQ in detail. Another one that joined the game is Fidelity. Fidelity launched their own S&P 500 style covered call ETF with a management fee of 40 basis points, just 5 basis points higher than JEPI. And this one, it looks like it's doing a rinse and repeat strategy. 2% out of the money S&P 500. So they did declare their first distribution, which I was very confused by. If you just click on monthly, by the way, horrible website. So the first distribution, I don't know why it's so low, guys, a little over 2 cents, which translates, they say monthly. So I'm assuming, if you just multiply that by 12, you get the annual, you divide it by the current market price, and you get 1% yield. So I don't know what's going on there. You will have to keep an eye on it and see what happens, maybe because it was launched But no, it was launched September 24th, so the October dividend should be the full month. I really don't understand why it's so low. Let's check out what happens next month. But if you're, to me, it doesn't make sense. If you're doing 2% out of the money, it should definitely be about at least 10% yield or something like that. Unless they're not covering the whole portfolio, which there's no details. I couldn't find any details about coverage, but let's keep our eye on it. Then you have the Invesco ones. You have EQLI if you want an equal weight S&P 500 instead of market cap weighted. Personally, I'm not a fan, but maybe you like that idea of having equal weight. This one, you're looking at about 8.5% yield. And then they have QQCI, which is literally a competitor to QQCC, the non-leveraged version, which is not at the actual NASDAQ 100, which we know the NASDAQ 100 index is actually managed or was invented by Invesco. So who better to come out with a NASDAQ 100 cover call ETF? So yields about, I think something like 9.5 on this one approximately, basically a little bit more than EQCL. So definitely ones to consider as well as a cornerstone of your portfolio. Remember, guys, these are all the diversified or index-based ones on the Canadian market, which I personally feel should make up the core or the foundation of your income portfolio. Last but not least is PDIV. This could definitely be added or considered as a core position. It's not leveraged. The management fees are standard 65 basis points. What I like about this one is the yield is pretty high, actually, but it's a combination of Canada and the US, and it's a combination of puts and calls as well. So this one's pretty unique in that sense. But obviously, if they're doing 12% yield with no leverage, you're pretty much expecting to give up a little bit more upside than a lot of these. So that's it for the diversified funds. Let's look diversified ETFs rather. Let's take a look at some split funds. Let's take a look at some niche funds as well. So the king of closed-end funds in Canada is still Canoe EIT with almost $3 billion in assets. Always trading at a small discount for some reason. You see that here, right? It's worth $15.17, but the price is $14.88. But the yield is pretty low now. It's like 8% or lower because they're not changing the monthly distribution of 10 cents a month or $1.20 a year. Maybe they will. I know that would be amazing for holders of Canoe EIT. I know there's diehard fans of this one that's been holding it for a really, really, really long time. And I think even from 10 cents to 11 cents, it would be absolutely incredible. This just continues to have stellar performance. These guys are just great stock pickers. Moving on to closed-end fund. Split funds, however, there's actually lots of opportunity right now, everyone. Let me just take out my face just in case here. There we go. I just want to make sure I'm not blocking any of the numbers here. So there's a lot of opportunities with split funds trading at discounts now, everyone. You see DGS is not at a discount, but really close. GDV, my personal favorite all-time split fund because of how diversified it is. It is trading at a discount. You see it's worth $11.18. You could pick some up for $10.83. LBS and SBC, Canadian Financial Split Funds, both of these are trading at discounts as well. You could see the NAVs here versus the stock price. They're higher than the stock price. LCS still at a discount, 901 versus 828, the stock price. PWI still at a big discount. You could pick it up for 936 when it's worth 991, and they recently increased the distribution. That's how good it's doing. And the yield is just under 11%. If you want some boring infrastructure and power and utility type stocks, this could be a good option as well. So yeah, great discounts. Middlefield, lots of opportunity as well, especially with ENS, with Enbridge. If you're an Enbridge fan, the Class A shares are worth $13.84, but you could pick some up at $12.82. Fantastic discount if you love Enbridge. Even RS has been taking a beating lately. I don't know why. I recently bought some more. You got to be crazy not to. REITs, high quality REITs. You see that the premium is very, very small now. It's definitely under 10%. And you see their latest one, IS, Infrastructure Dividend Split Corp, which same type of stocks as PWI here, is also trading at a discount. Right, it's worth $16.84. You could pick some up for $15.35. So guys, lots of opportunity if you understand split funds. Keyword, you gotta understand them. Great opportunities right now. Same thing for some Quadravest ones, right? DFN just updated their NAVs. the most horrible website in the world. But anyway, 622. DFN is 601, so trading very, very close, if not a small discount. FTN, same thing, 924, and I'm removing the 10 because that's the preferred shares, right? This is the unit NAV, so you got to subtract 10 to get rid of, to isolate the NAV of the Class A shares only. 924 for FTN. How much is FTN? 875. Great buying opportunity for all financial split funds, it seems, right? FTN, LBS, SBC. So some fantastic opportunities here. I'm sure BK, FFN, there might be on discounts as well. You could check it out. So yeah, really nice opportunity, guys. And you know that if you're asking me which one is in terms of could be a core position, it would definitely be GDV, because that's the most diversified. It's you're getting blue chip dividend stocks all over the world, and you're paying 1083 for something that's worth 1118. So just fantastic opportunity overall for split funds right now, everyone. In terms of you know what, I actually forgot to mention the Bitcoin and Ethereum purpose covered call ETFs. I just forgot. So Bitcoin doing pretty well. No changes in distribution yet. Ethereum not doing as well. I actually picked up a little bit more recently to average down a little bit. You see that the yield is over 15% right now. It's been getting killed for some reason. The distributions haven't changed, but I wouldn't be surprised if they reduce it to like 3 cents or something in the coming months because of how high the yield is here. But yeah, I don't really know what moves Ethereum, so I can't really comment on that. But Bitcoin doing pretty well. So in terms of what's undervalued, what sectors are undervalued on the Canadian market, or what funds you could buy, it's pretty obvious it's utilities and REITs, especially utilities. We know that Bell Canada just had a massive drop, and Bell Canada is 10% of UTS, the new Evolve Canadian Utilities Enhanced Yield Index Fund. This, you guys know that this is the one I have. I really like the Evolve sector specific covered call ETFs. I have UTS and I have Bank, which are the two leverage ones. Obviously, you guys know I like the leverage ones. I would only buy it if there's leverage. So great opportunity here. You have a extremely high yield now, I believe over 17% with UTS because of Bell Canada going down. But remember, Bell Canada is only one of the 10 companies, so it definitely stung. But at least you're diversified within the utilities, right? In this fund, you have pipelines, utilities, or electricity, and telecom as well. But there's other utility funds like HUTE, which is leverage. So these are the only two leverage ones, UTS and HUTE from Harvest ETFs. This one is different because it's the world. So it's definitely more diversified geographically than UTS, which only focuses on Canada. And then you also have the Hamilton Utilities Yield Maximizer, very high yield as well. And this one focuses on Canada as well. So you'll recognize a lot of the companies here. It also has the railroads as well. So if we just look at the stock charts, you could easily see the recent dip. Bang. Here's UTS with the utilities. Here's HUTE, right? Going up, because it's interest rate sensitive. Typically, when interest rate gets cut, they get cut. That helps utility stocks. But boom, even HUTE experienced a little downturn. Even UMAX experienced a little downturn. You actually see that the stock charts all look similar because they all hold similar stocks or similar sector, right? So utilities definitely a great opportunity, everyone. Even REITs. So you guys know I'm a big fan of RS. I feel like that is the best way to get your Canadian specific REIT exposure. Very, very high yield of over 13% now, right? Because the stock price is under 11 right now. Or the stock price is about 11.50 right now. So, and the yield on, let's say, 11.50 is over 13.5%. So fantastic buying opportunity for RS. Remember, RS does not do any covered calls right now. So this is a pure leveraged investment in REITs. And unit NAV is still massively over $20. So I really feel like there is absolutely no chance any dividends are going to be missed here. But besides RS, there's also RMAX as well. If you just don't want to deal with split funds, you could get RMAX, which is the Hamilton ETF REITs that focuses in North America. Harvest has one as well. They have HGR, but that one actually focuses on outside of Canada. It's mostly US and international. So I think those are really the two sectors that are standing out to me in terms of what's undervalued, and these are the funds to capitalize. So that's it, everyone. Stay tuned for the American episode coming up soon. We're going to do this again every single month. And see you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once, because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members, where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram, where you could follow us, or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.